To thank everyone for joining us today for our webinar, Accelerate Financial Variance Analysis with Ease. We'll begin in just a moment, but I just have a couple of quick things to go over. Today's webinar is being recorded, and you'll receive a link to the recording as soon as it's available. All participants are going to be muted, but you'll notice on the right-hand navigation, there's both a chat and a question box. So if you have any questions or technical difficulties, please reach out to us. And any questions for the presenters will be addressed at the end, but you can go ahead and you can enter those at any time. We're excited to have Emtec's Analytics Practice Director, Saad Syed, here with us today. And I know he's looking forward to educating you on this topic. And with that, I'll turn it over to you, Saad.
All right, thank you very much, Erica. Good afternoon, everyone, and welcome to our webinar today, where we'll be talking about accelerating your financial variance analysis with Emtec's FVA, or Financial Variance Analysis Solution, which is powered by Oracle Analytics Cloud Service, as well as the Autonomous Data Warehouse. Before we get started, just really quickly, we'll talk about Emtec as a whole, just to give you a brief overview. Emtec is a technology company that's been around for about 20 to 25 years now. We provide services through our three divisions. The first of which, Emtec Infrastructure Services, provides network and technology assets for clients, as well as security services, application and network security services. Emtec Digital Services is our arm through which we provide both custom application development as well as our Salesforce.com business. We do a lot of development on Salesforce.com as well. And then finally, the third group, which I am a part of, Emtec Consulting Services, is the Oracle-focused division of Emtec. ECS, or Emtec, is a system implementer and managed services provider across Oracle's ERP, HCM, EPM, and analytics product suites. This includes the legacy on-premise solutions as well as the cloud services. And we provide both, as I said, a implementation function as well as managed services across the suite of Oracle products. To talk a little bit about myself, I have been with Emtec for about 8.5 years now, going on 9 years. I run the analytics practice, and I have a background in finance and mergers and acquisitions. And following shortly after the last fiscal crash in 2008, I took up analytics really as a new focus, and then made my way over from finance to consulting and found myself at Emtec. So jumping right into our topic of the day, we're going to be talking about, as I said, our FVA tool, and we're going to be focusing on the business use case and the business value that the tool brings. Just to give you a brief overview of the agenda, we're going to talk a little bit, obviously, about the technical aspects of the tool, but we're not going to get too deep in today's discussion about the technical side of things. We have a lot of collateral we can share with you on technical specifications, on the overall system architecture, as well as pre-recorded presentations and even a hands-on demo environment that we can share about what the front end looks like. But for today's conversation, we really wanted to focus on where we see the business value in the current environment. So talking about the current environment, let's get into why variance analysis is so important right now. I mean, it's no surprise to anyone that the economic slowdown, both due to the pandemic and the recent social unrest, has taken a significant toll on businesses across the nation and really across the world. As I talk to economic experts and I read a lot of the publications that are coming to light recently, they've stressed that the recovery from this, unlike past periods of economic downturn, the recovery from this is really not going to be a V shape. It's going to be more of a Nike swoosh, if you will, with a gradual recovery over a longer period of time. And what that means is that the financial stress that companies were under is going to really have lingering effects through this recovery, and which really puts into focus the operating costs and operating models of these companies during the recovery phase. The old adage of doing more with less has never been truer than it is in times of recovery, and certainly that's going to be the case this time around as well. Companies are really going to have their budget owners and their department managers who have key pieces of operational costs under their areas of responsibility really take accountability and have a lot of vigilance around those operating costs, because frankly the corrective action needed or the reassessment needed is going to be what defines and differentiates companies who are able to successfully navigate this recovery period from those who aren't. The ability to be agile is going to be, in our opinion, a key factor in positioning companies to emerge out of this in a stronger place. And so we're going to talk about a company under recovery right now. It's obviously a made-up scenario, but we're going to talk about CETME Corp and just build a little story around what they're looking to do in this recovery and what they're focusing on in terms of their month-end close process, as well as their overall financials. So to set the stage a little bit, finance closes the prior month, as they do at many companies, around 7 days after the month has actually, the calendar month has ended. And they publish the results, which is a typical financial function. And what my management has asked is that budget owners start to be vigilant of their spending and really ensure that the numbers that are committed to as part of a restructured budget are adhered to. I mean, it's no mystery that for a lot of companies, FY20 has really taken a hit, and a lot of people are scrapping their old budgets and coming up with new recovery or COVID budgets, or post-COVID budgets, I should say. And the fact that companies are now asking their department managers and budget owners to really stick to those numbers, or at least be in a position to quickly identify where changes are needed, that's key. And so to execute on that, monthly reviews are being held at this company, as they are, I'm sure, across the world, to address budget variances in excess of 7%. Now, the reality is we've seen that number flex from between 5% to 20% as we talk to our customers, as we talk to peers out in the field. But we, for the purpose of our demonstration or for this hypothetical scenario, we picked 7% as a middle of the road. But what's coming out of that is, as those variances are identified, budget owners are being asked to then justify and explain those variances as part of the month-end close process to management, to leadership, so that corrective action can be taken and reforecasting can be done. If there are compelling market events that are causing a lot of change to occur. So how it works today. Now, this is supposed to lay out the current process that this company would take without the FVA solution in place. For the purpose of simplicity, we're assuming that this organization has an ERP system and an EPM system in place today. For again, for purpose of simplicity, let's just assume they are both Oracle systems, but really, you could have any ERP system or EPM system in place, and the same process would be true. But how it would basically work is, so as we stated previously, the finance publishes the monthly results once the month is closed on day 7 of the following month. And those results are then published out to department managers and budget owners across the organization. Budget owners then have to access the EPM tool or study offline reports to get the budget numbers together. Now, sometimes, or in a lot of cases, that those numbers can be provided to the department managers alongside the actual results, but someone is still having to access a separate EPM system to gather the budget numbers, collate them alongside the actual results for the prior month, and then publish those out either manually or electronically to the various budget owners. Remember, and those numbers that are published, the actuals and budgets, are usually published at a summary level. So then where the budget owners identify a variance that they need further explanation on, those users are contacting finance with requests for the transactional details. Now, at an enterprise level, finance is fielding questions from multiple department managers or budget owners about what could be multiple variances. And they're then obviously assigning those and collating those questions together and assigning them to their own finance team to respond to. Once that activity is done, finance resources can then go into the ERP system and pull out the relevant transactional detail to provide back to the budget owners. And we're not done here. So at this point, we've just started collating the data. Once that data goes back to the budget owners, they do their transactional review or transaction review for each account. And they can have further Q&A about, okay, hey, what was booked in a prior month versus what was booked in this month, or what was booked in this account versus maybe a related account elsewhere. And so there's some level of back and forth that could occur with the finance team. Up until this point, again, it's just about aggregating the data. It's just about compiling all the data needed. There's no real analysis being performed on it yet. Once all of this back and forth is completed, the budget owner is finally in a place where they can prepare for the monthly review with leadership. And keep in mind, going back to the prior slide really quick, if we're talking about financial results aren't published till day 7 of the next month, by the time you get to this step where now budget owners are prepared, given resource constraints or just the fact that most people are, working either remotely or having to deal with multiple responsibilities, you could be 2 or even 3 weeks into the next month before your users, your budget owners, are ready to talk about the prior month and running their analysis on the results of the prior month. And when we, going back to the top of my discussion, when we talked about timeliness and agility, well, the market factors that may have caused certain things to happen could very well have changed since then. And so once that step occurs, that's when your users are able to finally hold their monthly review with leadership and are able to take any corrective action. Again, which is, not ideal because you're now, you've got the clock ticking from when the results were published. And you're having this review a lot further down the line. So how should it work? And here, again, our baseline assumptions are the same. We have the same requirements from the business. We have the same footprint technologically that was in place in the first scenario. However, what we're adding in is the FVA, or financial variance analysis tool, on the OAKS platform. The first step is still the same. Finance publishes their monthly results at the exact same time, so day 7 following the month end. However, once they publish those results are incorporated into the FVA solution with our pre-built ETL, and it's a change capture ETL, so it picks up and brings over those results near real time. And budget owners immediately have access to both budget and actual data in the FVA tool. They are able to get the data not only at the aggregate level, they're able to get it at the detail level as well. And they can immediately look at current month or prior month or even prior year to look at what the financial trends have been in certain accounts. What that's really doing is immediately preparing your budget owners with all of the data. They're cutting out all the effort needed to collate and gather the data, and are actually focusing on what the analysis needed for that data is. So if there's any corrective action needed, that, hey, you know what, something got booked incorrectly from a prior month, or something is in an incorrect account, they can take corrective action alongside accounting, or at least plan for it alongside accounting immediately, and be prepared for their discussions with management a lot earlier, rather than taking that 6 or 8-step process that we talked about in the last couple of slides. You're really boiling that down to a 4-step process. And so how do we do that? Just to briefly cover at a very high level the solution architecture here. This represents, again, at a very high generic level, the FVA solution. We're pulling data in from the ERP. Now, this can be done both from an on-premise ERP or a cloud ERP system into the Oracle Autonomous Data Warehouse. We're aggregating and collating this data up from the transactional level to mimic the ERP system data. Obviously, this is the footprint of this data isn't a full replication of the ERP system, because we don't need that. It is purpose-built around the reporting that's done for each customer. So organizations that are slicing and dicing their data in a specific way, we take the time to make sure that this data warehouse is tuned to aggregate the reports in a similar way based on that client's needs. But importantly, what we're doing is we're using the Oracle Analytics Cloud platform to merge this data with the Hyperion, or PBCS, the Oracle EPM tools data. We're doing a complete extract of that data, the entire account tree that sits in those EPM solutions, and pulling that in live to the repository file, or really the data modeling backbone of Oracle Analytics Cloud. On the front end, we're presenting this data through a series of interactive reports that don't just look at static numbers and static functions, but really provide, sorry, my phone prompted, but they really provide interaction, and that can be done through the use of prompts or the use of drill down from aggregate to detail, but it really provides multiple levels of depth to those reports. And so what's the advantage? Well, obviously from a training perspective, we feel that the use of these interactive reports, where all you need to really do is click in order to get the data you need and select from drop-down menus, very low technical requirements or low learning curve in terms of an end user, you really have an advantage on training users, because you're no longer worrying about training them on multiple systems from EPM to ERP. You're really just having them focus on of really low tech or a low learning curve, I should say, around how to run a report. From an access perspective, obviously, users don't need to access multiple systems now, and from a both end user and administration perspective, you can have a much cleaner user access profile, and licensing needs can really be simplified across the organization. A point to note here is that our tool can also leverage existing security models in place either in your ERP or EPM system. So if you have user assignments done to certain departments or certain divisions, we can leverage those in the FP&A product so that you don't have to replicate security in the tool itself. You can just maintain and manage security in one place and then have that filter through to this tool. A benefit that we've really seen when we went out into the field with this tool, what we anticipated to be an ancillary benefit really became a main benefit, but it was that we were able to eliminate a lot of bottleneck and burden on the centralized finance teams. They're no longer having to field all of these questions and requests for data from these department owners. Since the department owners have all the data they need and they're much more focused on specific things, the amount of questions coming in considerably decreases, and the focus becomes more renewed on addressing possible errors. And another benefit here is, again, if you're enabling these users and empowering the end users to have more data at their fingertips, where they're less reliant on other teams to get their data, they feel more of a sense of control and more of a sense of ownership, which definitely helps increase accountability and foster this sense of empowerment amongst budget owners. And finally, the fact that we're able to compress this entire timeline or this entire process into a much quicker time period, you have course correction or corrective action happening a lot earlier in that process. We've seen this in the field where we're able to take multiple days off of the financial close. Once you add in again wait times and additional responsibilities, the old way of doing things was taking, in some cases, 10 to 15 days. We've been able to take 30% of time off of that whole process just by eliminating the back and forth in emails or the phone tag that some people play, or just the fact that, hey, I'll get to your request for data when I can. I have 5 others to deal with in front of you, right? So what that all leads to is a quicker, more efficient organization with quicker, more timely action being taken. And so, in closing, we would love to share with you the technical specifications of how we're doing this, what our architecture diagrams look like in more detail. We have a lot of use case mappings, as well as some great customer testimonials for where we've put the solution into place. And we also have a hands-on demo environment that I invite you all to come reach out to us, and would be happy to get you in there and show you how the solution works. My contact information is on the screen here, and of course we'll be, as Erica mentioned, we'll be sending out this deck so you have that information. But I welcome you all to come reach out to us so we can see how we can use the FP&A tool in your business.
Great, thank you, Saad. Just a reminder, a couple questions have come through, but and we'll start reading those. But if you do have questions, you can go ahead and enter them into the question box on the GoToWebinar pane. Saad, so there are a few questions that came through. The first one, how does this solution work?
Sure. So great question. The solution is really centered around a series of interactive reports. So what we do is we essentially work with each of our clients to create, what their ideal reporting structure should look like. For the most instances, what we've seen is essentially they want to look at an interactive P&L, which looks at by account grouping, looks at budget versus actual, and then on the actual side can give them the transactional details through some level of interaction. So we create these interactive reports that mimic a P&L that users can expand on from the aggregate level into the subledger detail, that can go all the way even into invoice detail, for example, if you're looking at AP accounts or AR accounts, and then compile those in this front-end interactive web interface, which is, for those of you who are familiar with the Oracle ERP products, OTBI uses the same type of front end that Oracle Analytics Cloud does, and so it's a very interactive, very fluid front end that allows you to do a lot of easy drilling into detailed data.
Great, thank you. We have another question that came through. From what release level does the FCA solution work, and are there technical limitations on release levels?
So it actually works on all of the Oracle Analytics Cloud release levels, all the way back to, I believe it's 10.1, and there are no current limitations on any of the release levels. It is customizable code that, as part of the implementation, we do align to the customer's specific release functions. So they're specific ERP, EPM functions, and then for the most part, we can align it to any version of Oracle Analytics Cloud that they have in place.
Great, thank you. Next question is, how is it different from what I get out of my EPM systems today?
Great question. So your EPM systems are absolutely great products to execute budgeting on, and even do a lot of financial reporting across the organization. However, those systems are not designed to capture transactional detail. Budgeting is done typically at the GL level. And so the most granular level of data there is a summarized GL account balance. What our solution does is then provide the next level of detail down. So even when you're loading actuals into your EPM system, they are at the same level as the most granular data level you budget on. So if you're budgeting on the GL level, for example, you only load actuals at that GL level. You're not going to have the actual detail. Our solution enhances that mix by adding the transactional detail there, and therefore enhances the reporting. It's not meant necessarily to replace EPM reporting, but to enhance it.
Great, thank you. Next question is the connection to EPM and ERP data real time?
It is. So our RPD, or the repository model that sits behind the FVA tool, has a live connection to the EPM data, and we use what we call a change capture ETL to capture and load data into the autonomous data warehouse. What this essentially means is anytime data is changing in your ERP system, it is loaded up. However, that is also dependent on the client's needs. If they don't require a real-time update from their ERP system, they certainly don't have to put that into place. Obviously, that has maintenance that goes along with it, or management of that ETL that goes along with it. If they want a more simplified, hey, I just want to load once a week, or I just want to load nightly. We do have scheduled ETLs that can be leveraged to load data from ERP systems on a predetermined schedule instead.
Great, thank you. I don't think you answered this question already, but what is the timeline to implement the solution?
Great question. So the timeline is largely determined based on the footprint for each client. If clients, for example, already have the cloud ERP system and Oracle's cloud EPM system, we're looking at as little as 7 to 8 weeks to implement. This can go up to 8 to 10 weeks if there is some third-party ERP system, for example, or some heavy customization that's needed on the system as well. But typically, we're looking at about 8 weeks of implementation time.
Great, thank you. It looks like that those are all the questions that we have. So I'd like to thank you, Saad. I'd like to thank everyone for joining us. Just a quick reminder, as Saad mentioned as well, that we did record this session, and we'll be sending it out, making it available to anybody that's interested. And as Saad also mentioned, please reach out if you're interested in the hands-on demo, the use case mappings, or the technical specifications or architecture diagrams. So thank you again, and hope everybody has a great day.
Thank you, everyone.